Good morning, everybody. This is Carlos from Omega Bus Trend with another forecast video and the profits trend forecasting analysis. Today is October 6, 2025. Let's get right into the forecast for today. We're focusing on the Nasdaq futures and we're going to stick with the basics structure here of what we're looking for the benefit of everybody to understand what we're looking at. In terms of opportunity. So right off the bat, as always, we're going to start analyzing the market from right to left and understanding where we're at. That's the question that we always must have. And once we clear that up, then we're going to, find some clarity into expecting what to expect. For the market. Right off the bat, I'm on a 4-hour chart, and from the last couple of weeks, we have taken a very massive break into the prior swing highs here, right? Basically just mostly looking for a structure based off the market. So this is an important high that happens back in September between 23 and 24th. 22 to 23. And the market just broke out of it after October 2nd. And that is an indicative of a bullish continuation market. However, we got to be very careful because the market never moved in a single sweep without providing a decent pullback. So structure-wise, market just broke to the upside at that point. That's a bullish outlook. Then the market just pulled back, came back up again. This high did not took that prior swing high until indeed a propeller bar actually continued to the upward tendency, and that is a validation. And again, I am on a 4-hour chart of a bullish tendency. So the market basically went up, came back and retested the prior resistance zones. You can see it right there. And held as a strong support to continue further higher. Again, another validation of a bullish tendency. Not only they broke the important high of the main structure, but it also the market pulled back the previous high resistance turned into a strong support, and it held strongly to the upside. That doesn't mean that the market will not possibly going to try to go into a pullback. So be aware of the fact that that might be the case. And what I mean by pullback, it's a 4-hour chart. We can see here that the pullback kind of translates into a couple of bars on the way down, right? Before moving forward, you can see the pullbacks here, then moving higher, pullback higher, pullback higher. So it's important for us to understand that after a certain prolonged period of movement, we should expect at least a couple of pullbacks to continue furthermore. So our job is to identify, and again, I'm analyzing on a 4-hour chart, a potential corrective mode, and our job is to find where those support zones will end so that we turn those into zones, so that then we can expect the market to bounce from it and potentially continue further higher. For day trading and short-term trading, that means that when we drop from a 4-hour chart possibly to a 5-minute or perhaps a 15-minute, that will suffice good enough from the state of the market where it is right now towards the pullback. Could probably represent maybe a couple hundred points. Good enough for one session or maybe even two trading sessions or 2 days to go into a setup of a retracement and then find support and continue further higher. Does that make sense? Now, moving along into the most recent structure of the market just broke above the important 1, 2, 3, 4 resistance points. You can see them right there. And basically, I'm noticing that it's kind of closing right above or below those high. That is an indicative of a failure of a bullish outlook where they're possibly trapping buyers on the top to start the potential pullback of of the expectancy of a pullback that we've been waiting for based on the market structure. In order for us to be able to validate that in such a way, we need to then drop down at this point. So from 1 hour, from 4 hour, let's just jump to a 1 hour and see what we can find. And definitely this is a shorter term of analysis. And I can see, if I switch to candle there, you can see kind of it's a reversal candle pattern. Might be a doji, I guess. Here's a hangman. So this is indicative of that week of manipulation of the top, like finding a liquidity void, if you understand there, where there's nothing in here, right? Where the market just pushed through. There was absolutely nothing to go at it. Potentially, people selling on the top, they place a stop right on the right above those regions, and that's where the market just going in and try to take those stops and clear out the path to then start the pullback. Again, this is all hypothesis, but it is what I am envisioning and expecting at this point, and I'm very inclined to start looking for short-term selling positions. In my opinion, I would be going into a potential sell using what we called a pulling bar technique, selling right at the break of that candle on the top. I like to use bar charts, are clearer for me, and that will dictate for me to go short just right below that candle, and the stop is going to be right on top of it, right? And the question here, and again, I'm going into a very, very simple modern analysis. Typically, this is the previous day close, and it's basically what we call into the concept of back to the mean, revert to the mean for those trading order flow. In this case, basically, I'm expecting for the market to go back and try to close the gap as much as possible, and that will suffice for the market to rebalance itself, right? Back to the mean, closing the gap, because right now, as the market opens, they will create a massive gap of about 180 and 188. How can we find where the gap is going to be? Very simple. If you have access to the Omega trend, you go onto the NQ, see the NQ right at the top. You click on the icon, it will pop up here, and it will automatically calculate how much of a gap in points from yesterday's close the market is located at. It's almost 200 points. Needless to say, 200 points without doing a pullback, that doesn't, it's not normal, which means this has to be corrected a little bit, meaning we are expecting as the market opens to the market eventually push it even a little bit further higher or not, and then eventually try to come back and close that position that we talked about, which is closing that gap. So anywhere in there, it's fine by me. I'm looking for strong opportunities in there and collect some sort of, as a short-term trader, collect some points on the way down, looking anywhere from 40, 50 points and be done for the day. Short-term trading, scalpers, day trading, that's the way to go. For swing trading, I'll stick with the 4-hour chart, and the technique is completely different. I'm going to cancel this so it's easier for you to understand it. There you go. So back into the 1-hour chart, we already know what expectancy of the market is. I can see the reversal starting to happen. This is looking absolutely great. And the next thing is I'm dropping to a 15-minute chart, and in here I'm using a little bit more of a wiggle structure of the market to assess and identify very specific points from this massive swing low to the swing high, and that is basically over 200 and something points. But I'm going to unveil now my analysis. Boom, and here it is. So this is what I'm expecting from the market as the market opened today. I'm expecting the market to pull back towards Synergy Zone or support number 1. Then we have support number 2 with a power zone inside of it. You can see there is a dual shaded boxes right in there. And that is a strong opposing support area, meaning that one of the expectancy is to see if the market hit anywhere inside the zone. We can expect some sort of a movement like such. That's one hypothesis. The next one is for the market to carry on and continue, but moving swiftly, right? Swiftly towards its zone number 2 and bounce from there, right? There. And then I'm going to plot the other one. It would be something similar, number 3, and that should suffice to hold it correctly, because this is actually the previous day close. It just so happened to have a synergy zone level 2 on top of it. That is what we call a power level. Very, it could be very strong. We'll see about that. But we have not 1 or 2, but 3 major support zones holding against sellers or defending the sell-off, right? So the buyers are going to be waiting patiently here to set themselves up into potential long-term perspective opportunities. And until that happens, basically, we just have to be very patient in order for us to wait for it. Now, that's the key of the game today. I'm expecting for the market to close the gap. So my first potential strategy will be waiting for a pullback, we already see a pullback. I'm on a 15-minute chart. This is a decent pullback. I see they're holding. That's a slingshot, a previous slingshot right here. And that resistance turning into support. So having said that, I'm waiting for the market to finish this stuff. 9:30 will come in. I'll see the reaction of the market, and I need a pullback from this point on. However, if they don't provide a pullback, because they already are on a pullback, meaning if they don't make a new lower low, that's what I'm trying to say, then I'll have to wait for them to break the high with conviction and then consider myself a breakout entry. Why? Because I see myself here in a massively overbought condition. My best scenario is for waiting for the market to pull back all the way to the support zone 1 to no more than 3. And then from there on, double check with the OT and see anything from N1 to N15 massively green, as you see it right, showing it right here. But this doesn't account for now because the market hasn't opened, 1. Number 2, I can see the VIX is positive from lower notes, right, M1 to M5. This is positive. It means that market has to sell off on the indices. Again, make a lot of sense because we're preparing for the opening of the market. This is based on correlation. Today, we need to deploy 100% patience in the specific indices of the Nasdaq and the ES. Again, pullback. I'm looking for that pullback. I'm selling the pullback possibly because there is enough space for us to do so, and wait for that to finish and carry on into the buy mode because the main trend is long. It's just so happened that the distance from where we're at to the support that I'm waiting for to consider myself a buyer again is good enough to counter trend and capitalize on it. I'm trying to be very specific about those opportunities so we can cater to both sides of the hemisphere here. We got the short-term traders, scalpers, and swing trader. As a swing trader, I trade on a 1-hour chart and I patiently wait for the zone to hit and look for myself to be a buyer in this area with validation with the OT, meaning VIX has to be massively negative. You see the dollar index right here. See it negative all the way through, and then a strength into the NQ, and I'll possibly consider myself long. If I scan the market right off the bat, YM and Russell are the 2 that we should be focusing on the buy mode. That's pretty simple and straightforward. Right now, there's nothing else in here on the pre-market. YM buy setup and Russell buy setup. But as you already know, once 9:30 opens it, all hell breaks loose and everything changes. And finally, what we have today is low impact report all the way through 8 o'clock, 8:30. That's Tuesday. So there's nothing other than a FOMC speaking engagement at 7. So there's nothing fueling the market other than price action, price structure, and basically fear and greed. There is no volume based on reaction of a report or the FOMC or Fed speaking and so on and so forth. So it's all about pure price action analysis and waiting accordingly. So suggestion, wait patiently for the market to jump in, show you the way, and then you'll take it from there. Okay. Targets to the upside will be 25,272, 25,301, 25,347, 25,391, 25,440, 25,476. On the way down, again, we have potential support at the 25,139, 0.94, 0.46, 0.33, and 24,992. Those are the strongest support area. If we clear massive, way below the, with a massive sell-off way below the 24,992, expect the market to potentially go into the massive support number 4. There is a big, huge white space in there, and that will be kind of the easiest path of a sell-off, and targeting 24,867, 24,837, and 24,776. But in the meantime, pullback to continue higher. Long-term perspective is bullish. There is enough space for the pullback toward the support for us short-term traders to capitalize on if you're fast enough and you have your wits and techniques to do so. If not, you're more conservative. Wait for a clear path after a pullback to consider a buyer right after the pullback has ended, using any type of technique or strategy or signal system that you use, and suddenly validate the trend once that happens with the OT, so that you can find yourself with pure clarity and conviction that your signal, technique, or system, it is validated and confirmed. Does that make sense? We're stacking everything in favoring one direction so that the decisions that we make become more of a high probability win than a loss. With that being said, this is Carlos Diaz. Thank you for taking a look at the forecast. Let me know how you're using the OT, and let me know exactly what your techniques are, and share your wins or losses. It doesn't matter, so we can share and grow together by helping us together understand the validations of the trend and making sure that we make strategized, logical, and educated decisions before pulling the trigger into the market. As always, share the love with your loved ones, and I'll see you in the next one.